always doubting myself. I know I try not to listen to what they say. I always find it wears me down. And every time that I come here, I'm always doubting myself. I know I try not to listen to what they
All right, guys, what is going on? What up? Welcome to the Fed Funds Rate and FOMC stream. Welcome. And thank you for 7,000 subscribers. Look at that. 7,000 subscribers. It's looking good, man. It's looking good. It's looking magnificent. Unlike the majority of price action this week. All right. Which brings me into the news that we have today. Which brings me right into the news. But what's good? Willow, Naruto, Lucas, Felix, Vadu, Monkey, Sean, Alex, C, Marius, Hadar. Hadar, where's that sniper at, big fella? Where is it? What's good, Nikki? Jonas, where's your sniper? Where is it at? You need it. What's good, Akinola, Eli, Hermida? Look at music today. It's just drum and bass, my friend. It's just liquid drum and bass. I'll drop the link in the chat. That's all it is. Good old liquid drum and bass. I've listened to this mix like, it's 3 hours long, but I've probably listened to it at least once a week the last like 2 years. It's got 2 million views. I'm probably 1 million views just by myself. All right. Was good. 2020, John C. Stephanie, Felix, Mohammed, what's good, man? What do you think about news? What do I think about it? What do you think about news? I think it'll be violent, but we're going to find out. What's going on, Cameron? What's good, Maximiliano? So, let me see. This is Central Time. So this is going to be 2 p.m. Eastern, 2:30 p.m. Eastern. But yeah, here it is. Fed funds rate in about an hour, about 50 minutes. And then 30 minutes after that is the press conference. So I don't know if we're going to be here for all of that. We might end up taking a break and coming back. I don't know. We'll play it by ear and we'll figure it out. We'll figure it out as we go. But yeah, so just be mindful of that. You should have already known this was today. From Sunday, right? Looking at the week ahead of time, you should already know. Was good, Lazar? I had to wait for my new card. Someone tried to use my account, so they froze everything. Oh, yikes. Yeah, that's never good. It's like that in the US sometimes too. Like I went to a shady gas station and then like 3 weeks later, there was like a mechanic shop in France that charged like $200 to my account. I'm like, what the fuck? Shady stuff, man. It happens. What's good, Infinity? Guys, drop a like if you can see, if you can hear, and well, if you're just ready, man. If you're just ready. I don't have any specific thing planned today. We'll probably chill out for a little bit. I don't see a lot happening prior to the Fed funds rate at 1 o'clock. Yeah. So, if you have not been trading that well last week as well as this week, just take a look at the dollar. That's part of the reason. And I say in part because, obviously, S&P last night, right? You guys saw the market review. Almost a wick in, wicked out. Got out at the high of the day to the very minute. Streamers are taking losses. We're getting out at the high of the day to the very minute. So, hey, to each their own, all right? And I'm not the greatest trader in the world, but I'm just saying, you see what other people do, you see what we do here, and You can make your own conclusion. But anyways, dollar index has been generally sideways since the 17th. So it's been like 2 weeks or so. 14 days, but 10, I guess 10 trading days rather. And basically the last 2 weeks. It's been non-directional. It's been stuck in consolidation, but that by itself is not bad. You just have to know how to trade those conditions. So what do we do? I know I went over this before, but what do you do when the dollar index consolidates? What do you do? Let me know. Let me know. What's good, Marshall? What's good, Mr. Kesha? Crosspair says Felix trade DXY pairs, Mohammed. That's a very interesting way of saying crosspairs, but I'll take it. I've never seen somebody say that before in 10 years. I've never seen that. DXY pairs. Interesting. Okay. So if the dollar index consolidation, right? Look at British pound before we move forward. Oh my God. Oh my heavens. Look at this. Is even worse. This is probably the worst. In terms of like length of consolidation. Oh my God, dude. It's been consolidating damn near since last year. It's been like a month and some change straight of sideways. Almost 2 months. That's so disgusting. That's so awful. Horrible. But what ends up happening? What ends up happening when dollar consolidates and even British pound consolidates? You saw stuff like GJ absolutely rip higher, 500 pips, whatever this was here, 600 maybe. And we're getting obviously some movement in the downside as well. So GJ pretty volatile. Euro yen, same thing, where we're actually getting some movement, right? It's at least moving in a general single direction. AJ, same thing. I don't even know what markups these are. Oh, you know what? I think I mentioned these equal highs on AJ last week. And that was never traded to. What a scam. What a scam. The market's wrong. The market is wrong. All right. No, but it's cool. So anyway, the point is we're seeing movement in cross pairs when the dollar consolidates. And so, you know, and this is the type of things, right? This, like what I just showed you in the last 5 minutes. This is the exact reason why when people tell me they only watch one asset, like, oh, I only watch euro. That is the dumbest shit in my opinion, because look at the euro right now. Look at this. I mean, I guess there's a little bit, it's like a slight movement lower, I guess, but it's like, bro, there's very little volatility over there. There's no sustained movement, so it's going to be like scalper's paradise. That's horrible. Where you have stuff like cross pairs that actually move in a sustained direction. That's a lot easier to trade. So that's just dumb. Oh, I only trade euro. I only watch euro or British pound or Aussie and Kiwi. Okay, well, miss out then. And then bitch about how, oh, you know, all these people are taking good trades and I'm just like not trading. Great. You got into trading to not trade? Really? Dumb. That's just so dumb. But to each their own opinion, I guess. Okay. All the gurus say master one pair. Yeah, it's fucking retarded. Sorry. Look, guys, I just woke up not all that long ago. I slept in today, so I might curse a little bit, and it is what it is. I'm doing my best though. All right. What do you think about the daily imbalance on NQ at the 19th January candle? Do you think NQ will go bullish at the beginning of February? I don't know. I mean, that's, you know what, Lucas, I'm glad you brought that up. That's actually another good point. Today is also the last day of January. So it could be, things could be a little bit sloppy today as well. Let me see. Let's go to the Nasdaq. Google, in case you were wondering why the indices were moving after hours yesterday, I did mention this in the market review. Google had earnings after hours and they absolutely ripped. They ripped lower like 6%, 7%. It was awful. Totally awful. And that was the reason that, in my opinion, that the Nasdaq was moving after hours yesterday. Okay. So at least on the triple Qs, this is the 19th. And so we had explosive movement in the middle of this month. And so all we did was retrace lower back into this range. So that's not a surprise. Like, this should not be surprising, but I wouldn't necessarily say this is long. I'm not going deep on any stocks right now. None of them. I'm just still holding what we already have. Netflix, I know we haven't had an update on Netflix in a minute. I did share this on Facebook the other day, right? We had hit, I think, 500 recently. And then I said, yeah, that's probably a partial, but I'm going to hold it anyway. And then they gave us earnings and now we're in the 570s. So Netflix has been a absolute blessing the last year and some change. And I never figured this would happen. I just had, right around that time in November of 2022, they had launched an ad supported tier. And I said, you know what? Well, I want to see what that does. We've more than doubled since then. So that to me is very interesting. So I'm just still holding Netflix. And then even, honestly, even JP Morgan has been beyond expectations. Absolutely beyond. It has surpassed all of the expectations that I had. Right? Because I think originally we talked about 145. We got to the high end of the gap at 168. And now we just hit all-time highs again at 178. I mean, this, I don't even know where it's going to stop. I don't know. But it's really cool, though. You know, and I was even on a space a few weeks ago before JP Morgan talked about all-time highs. And I was saying, like, I'm looking for all-time highs on JP Morgan, but prior to that, Wolf, the guy who hosts the Twitter space, he was like, you know, what are you doing now that, you know, stocks are almost at all-time highs, you know, indices at all-time highs, like, what are you doing? I said, well, look, whenever and this is probably true for most people, whenever we get out of a trade, a lot of the times, not every time, but a lot of the times, what happens? It keeps going, right? We take 30 pips out of a euro trade and then it runs for 50, 60 pips. Or maybe you look back at some of your old trades and you were trading like down at a low and you realized, oh shit, well, it rallied the next 2 weeks, but I'm not a part of it. And so I kind of explained that, like, well, I don't have a reason to sell. I don't think it's a short. I don't know how high it's going to go, but I'm just going to hold it. And then, just like I showed you, Netflix booming, JP Morgan booming. It's like, I don't know. When you feel like selling, when I feel like selling, I just don't. And then it keeps going. So it's a very weird feeling because I'm so used to just doing that. Like, oh, getting out at all-time highs, great. And then it just keeps pumping. It's like, well, fuck, man. Missed out, you know? So I just think we're at a very, let me take all this off. I just think we're at a very interesting place. I mean, It's fresh all-time highs. Like, what do we do? And that's the answer. I don't know. So it's hard for me to say, Lucas, that the Nasdaq is bullish. I don't know. I mean, look how far it's rallied, bro. You know, from this area, December 2022 was around the last time that I was saying that this was a buy. You know, did I think it would run to all-time highs the next year? No, I didn't say that. But now that we're here, it's like, damn, I don't want to go deep into stocks after this. You know, I don't want to buy at all-time highs. That's just goober, right? Oh, we're at 422 as well. Look at that, 420. We're at the 420 price level. Huh. I'm sure Willow can appreciate that. So that's kind of cool. We'll look at gold. What's good, Kyle? We can take a look at gold. Gold has underperformed relative to its seasonal pattern. But at the same time, just like indices, gold also had hit all-time highs. Remember we talked about 2100? I talked about that level for months before it happened. We finally got there. And then I know a lot of the guys on Twitter were like, oh, this is a turtle soup short. I said, shorting in the middle of a bullish seasonal move, good fucking luck to you. Whoop, right against them. When smart money becomes dumb money. But anyways, January, February is supposed to be bullish typically. But, and again, I mentioned this to not Zachary Hogan, but a different Zachary last night, was saying how, like, yeah, it's underperforming its seasonal pattern, but it's not a surprise though, because we are coming off of all-time highs. But just because we're coming off all-time highs doesn't mean short. So if you've been shorting in a potentially bullish market, just go ahead and, you know, go to your nearest Party City store. Go ahead and get that clown costume. All right, go ahead and put that on. Get that little red nose and put it on. Okay, that's just silly. Now, silver absolutely has been underperforming relative to gold. Okay, you see how gold is like continuously higher? Silver, it's been lagging behind. It's been lagging behind. So it's okay. I still have physical silver, and I'll still buy a shit ton more if it goes lower. That's all right. I still want to hold this for a long term. But you asked about gold. I still think if we're gonna trade gold, I would probably long. Still in the bullish seasonal pattern. It's stronger than silver. I would look for buys more so than shorts. Know what I'm saying? Yeah, you're right, Trillionaire. We do have an unhinged. You know, I haven't been awake all that long. I've been up like maybe an hour and a half. I slept in. You know, when I work out a lot and then there's like news the next day, I'm like, all right, I'm not waking up. I sleep in big time. Big time. And Kyle, I haven't looked at UJ, or I took a brief look at Euro. What I'm trying to explain to you guys is that, you know, we have news in a little bit, and I don't know what's going to happen. I don't expect any large movement until then. I don't expect anything until then. Even all like the lows and the highs are all different across the board. Yeah. See that. This is just awful. This is horrible. Even let's look at the Dow for just a minute. Look at the Dow on a 5-minute time frame right here. What on earth is this price action right in here? What on earth is this? Wick lower, wick higher, wick lower, wick lower, wick lower, wick higher, lower. Like, dude, What is that? Imagine trading that and taking losses. Like, ugh, that's horrible. That's just awful. Which is why last night I made the decision to just miss out this morning. I'm like, no, I'm not going to trade. You guys got it. If you took a good trade this morning, by all means, that's good, man. I'm not. I'd rather just, we did what we did on the S&P yesterday. Good enough. Okay? It's good enough. Let me see. I'm trying to catch up on the chat. You asked this yesterday. Oh, do you ever count bodies as liquidity, or is it always the wicks? I look at liquidity as at lows, at highs, and then above highs and below lows. So, I mean, easy example. This is hindsight because I wasn't in front of the charts for this, but like just in a quick, easy example, liquidity is at that low and below it, which is why a lot of the times when you see when you see stuff, okay, like this, like on Dow, for example, when you see large wicks like this that trade above highs and then immediately trade off of it, that is a stop run. And then you see that it trades lower for other recent lows. But that's what I'm saying. It's at the high and above it. And then right near that 20 level too. You see how it stops right at 720 on the Dow Jones? Like 720, that 20 is literally the exact high. Right? I wonder where you heard that before. 20 levels, 50 levels, 80 levels, 0 levels. So no, like to me, bodies are not liquidity. Imbalances are not liquidity. Whoever started that, I think, is an idiot. With all due respect. That's the most dumbest shit I ever heard. Other than I'm going to be a trader and then not trade most of the time. Like that is stupid. And then, oh, there's liquidity within imbalances like that. Are you serious? If it's above a high or below a low, then okay, sure. But that's more so because of the high, not the imbalance. But how do you know, whatever, man. To each their own. I'm just here to give you my opinion and that's it. Okay? You've seen what I can do. Big ass moves on the daily, weekly time frame, and even wicking the 1 minute time frame. So, you know, I believe what I believe. Whether I'm right or wrong, who knows? Who knows? Yeah, I say this all the time too. Who do you want me to call and verify that information, bro? You want me to just call the head of, I don't know, the SEC or the Jerome Powell or the Fed Reserve? Be like, hey, Fed Reserve, you know, I'm looking at this imbalance on a 5 minute time frame. Is there liquidity there? Who the fuck is going to verify that? Not me. I don't know. But no, I don't think liquidity is at imbalances. That doesn't make any sense. I believe it's more algorithmic. It's just better when there's like an imbalance above a high or something. Like that would be cool. I don't know if we have one anywhere in here. I could give you an easy example, but I don't see one. I'll find one eventually, but you guys get what I'm saying. Like if there was a imbalance right here above a short-term high, great. Yeah, there's liquidity there, but it's because of the high, not because of the imbalance. My opinion. Do you read finance magazines like the Wall Street Journal or something? No, I don't read none of that shit. None of it. I don't care about none of that. This is a monster on gold this morning. 15-minute midnight for you. Mitigation. You guys love that mitigation, don't you? I'm getting more and more messages from you guys about the mitigation. You said gold 15-minute midnight for me. In here? Like right in here somewhere? I guess. I don't know. Well, either way, you're right. That would have been a monster move. But I don't trade right at midnight. Personally. What did I dream about last night? I didn't have any dreams last night. I don't dream like almost ever. I'm too tired for that shit. Brain is too tired. But yeah, we just went over S&P and the Nasdaq. Kesha. My dog kept stalling on his walk. Well, drag him along. Nah, don't do that. Pick him up and be like, let's go, bro. We don't have time. We ain't got time. This morning I told someone imbalance is not liquidity. Excuse me. This morning, I can screenshot and show y'all. He was saying imbalance is internal liquidity. Well, let him believe what he wants to. I guarantee he doesn't get better entries or exits than me, so it doesn't matter. And I know that's very egotistical, but look what the fuck I did yesterday. So honestly, respectfully, fuck what they're talking about. It doesn't matter. Who cares about being right or being wrong? I mean, I do correct people a lot, but that's just because when I see bad information, I correct people because I know other people read it and I want to challenge that. So at least they get an opportunity to look at the right shit. So, you know, it's just a waste of time arguing with people. 99 times out of 100, it's not going to be, oh man, you're right. I was wrong. Sorry about that. Most people are not that way. Most people are not that way. I am. I'm open for debate. Like, I'm open for it. If you want to prove me wrong on something, then do it. You know? And that's that. Personal opinion. 69 viewers. Let's go. Let's see if we can get to 75. That's still like the struggling point. We always get to like the high 60s. We may kiss 70 and then we never get 75. So let's see if we can push through that today. We'll see. We'll see. Have you ever traded currency futures? Absolutely. I want to trade them beside the indices because what top step? I can only trade futures. Right. You can do that. Why is my YM 2024 chart 10 minutes behind in real time? Because that's futures data and you have to pay for futures data for real time. That's why. It's not, I think it's like $7 a month now. It used to be $4. They bumped it to $7. Bastards. But it's all right. Pre-London for me was when I woke up and looking to chunk the mortgage money into something. Cameron. House be paid off if I caught that. Well, don't look, man, read the risk disclaimer. Don't trade with money you cannot afford to lose. All right. Cameron, don't come by and be like, you know, John, you said the indices was bullish. I put the house on it and now I'm homeless. We can't have a homeless Cameron, bro. We need you to be in a home. We need that. Okay. I know we're smart money stoics, but we're not going to actually practice sleeping on the ground in a cloth. You know, we're not doing that. We'll take the mindset, but we're not doing the extreme shit. Cold bath is the furthest I'll go with that, but not sleeping on the ground outside. That's ridiculous. That's ridiculous. I'm selling gold from 2053 and want to see higher time frame low. Hey, your trade is your trade, Muhammad. Go for it. Go for it. What do you think about that Dow liquidity run? Oh, I have no idea. I'm not even looking at it. I don't know what to expect here for any of them. Literally, I don't know what to expect for any of them. I have no clue. I have no idea, my friends. I don't know. All the lows are different and the highs are different, so it's hard to say. It's hard to say. We got 70. Look again, let's see if we get 75. And if we get 75 today, I'll give away some books on Friday. I'll give away I'll give away 3 copies of Stillness is the Key if we can get to 75. We don't even have to stay at 70. We just have to get 75. And then we can do it. I've been trying to give away these books for like 3 or 4 days now. I've been trying to do it. Thank you, Lee Bright. Yeah, drop a like on the stream, guys. I would appreciate that. I would appreciate it. I left the chat open today as well to subscribers. You only got to subscribe for 1 minute in order to be in the chat today. GJ had lovely equal lows that it clapped. I enjoyed watching it. That's good, Pop. Do I trade US 100? No, I do not, but I trade Nasdaq every once in a while. Lucas, it's going to be almost the same. It's going to be almost the same. Like if you look at British pound, like GBP USD, okay? I haven't updated my list, so I might not have the right one. 6B1. Well, this is the front contract. So they like you're not going to be able to trade this. You have to go specific to whatever. I think it's 6BH or some shit. I don't know what the symbol is off the top of my head. But like you see how close that is? Like here's GBP USD, right? And then here is 6B1. It's basically the same exact thing. The only difference is yen, like yen futures is going to be an inverse of USD JPY because it's the dollar versus the yen, whereas the yen futures by itself has no dollar. So it's inverted. Like Top Gun, right? S&P, I would put this on your chart. Maybe not for today, because it's like 40, almost 50 points higher. But we do have like a double top / equal highs right at 49.57 and a quarter. So I would definitely have that in your chart for future reference. So I'm thinking, oh, hello there. If we have all these consecutive lows here and then these low resistant lows at 48.73, if this rips today, it might rip lower. We'll probably leave this open and probably trade to that at a later date. Oh, 75. Let's go. Let's go, chat. 7,000 subscribers, 75 viewers, which is all-time highs for a solo stream. 78. Man, you guys are awesome, bro. You guys are awesome. Oh, I forgot to put our goal. I got to do that later today. The membership goal. So look at that. All-time highs for members, all-time highs for views, all-time highs for subscribers. Like, come on, bro. That's good stuff. That's great. That's wonderful. Thank you guys for being here. It's been pretty cool. I ain't gonna lie to you. This journey's been pretty cool. Pretty cool. You know, not bad for a back of the bus kind of kid, okay? Not bad. I'll just leave it. I guess I'll just leave it like this then. Oh, 80s. Look at that. 83. Wow. I wonder if there's a SEO going on because I put Fed funds rate in FOMC. I wonder if that is like pushing me on a like, I wonder if YouTube is pushing it more than it usually does. So yeah, that's awesome. Hermida, I don't know. I mean, I'll probably just celebrate by giving away the 3 books on Friday's stream. So this is what I'm going to do. Okay, this is what I'm going to do. I will tweet tomorrow. So I'll like in the morning I'll tweet. Okay? And on Friday, I will do the giveaway to all of, like, all you have to do to enter is comment on that tweet. Okay, so it'll be tomorrow morning. It'll be something like comment stillness or some shit. For stillness is the key. Okay? I might, you know what? Maybe since we hit the 8, we overshot 75 and we got to the 80s. You know what? Maybe I'll give away a 10K challenge. How about that? We hit 80s. So I'll do that too. I'll give away 3 books and then I'll give away a 10K liquid trader. How about that? You guys good with that? I feel like that's pretty good. I feel like that's a pretty good deal. Three books and a 10K challenge. Tag Ryan. The only time he ever got back to me was when I posted the leather-bound copy of Meditations. He did repost that to his story. That was really cool. The guy only lives 3 hours away from me. He lives in Austin. I went to his bookshop earlier in 2023. Oh, it was about a year ago. A year ago this month. It was really cool. I didn't see any cats there, though. I wanted to see either Ryan or the cats. He wasn't there. The cats weren't there either. I was like, fuck, man. But it's cool. I bought a bunch of books and the coins I have on my desk. Or I mean my computer. The Memento Mori coin and the Premeditatio Malorum coin. Which is cool. It's cool stuff. You know, I thought about, I think, matter of fact, I think he ran out. That's why I never talked about it. I believe he has a leather-bound version of the Daily Stoic. That I want to grab too. That I want to grab as well. 100%. Kevin, I've been watching you for a week. Haven't you been to IM Academy? And what is the advantage if I'm a member? Are you online every day? Kevin, I was an educator for that company for over 3 years. And I left almost a year, probably about 10 months ago, I left. But if you're there, I don't know, man. Get as much out of it as you can. That's my opinion. And I'm going to leave it at that. I will leave it at that. But no, for real, he has cats that live there. I seen it on social media. I'm like, where were the cats when I was there, bro? I'd have took them home with me, dog. I'd have been like, I'll take these books and then these cats, I'm taking them. They're mine. Fun fact though, Kevin, I'm sure if you look around on their website, I'm pretty sure I still have videos that are there. You know what's funny? I think I said this before. I didn't want to be too loud about it. But you guys, some of you have came to this YouTube channel because of the content that I have there. It's like a free funnel, you know, which is hilarious. It's absolutely hilarious. It's just funny shit. But look, you can be here for free. My live streams are free. You can invite your friends and your family, your mom, whoever. You can come here for free. The majority of the content on this channel is also free. I got a video coming out. Matter of fact, that brings me to my next point. I condensed Monday's stream and Tuesday's stream to, I think the first one's a 40-minute, maybe 35-minute video. The next one's an 18-minute video. One comes out today at 3 o'clock so one comes out in 2 hours. The next one comes out tomorrow at 11:45. So right before our normal stream time. It's free. Most of it is free. Now, if you want to join the Discord, if you want some private lesson, like private member-only videos, like the market reviews, some of the tutorials, the mitigation models, stuff like that, it's only $25 a month to join our community. I'm not charging hundreds of dollars. I'm not doing that. I don't believe people should pay a lot of money to learn how to trade. I don't believe that. Okay? So if you want to be here for free, you can stay here for free. If you want to get the sniper badge, you know, chat access, because not every live stream is public access. Most live streams are chat, like the chat is member only. If you want the sniper, which is also a loyalty badge, it changes colors over time. It's $25 a month USD. And that's it. So you're welcome to do that. And I don't care if you're part of IM Academy or not, or if you're a part of another MLM or not. I don't care. I don't care what you do, where you're at. My home is open to all of you. Our community is open to anybody that wants to be here. I'm not going to beg you to stay either. Right? I'm not going to manipulate you into paying hundreds of dollars. If you want to leave, leave. If you want to take a 90-day break, cancel your subscription. Go ahead. I have an open door policy. You want to be here, stay. If you don't want to be here, don't be here. A lot of businesses will not tell you that. A lot of businesses will, no, you got to get them to stay, bro. You got to get them to stay. Keep them paying their subscription. Man, fuck all that, bro. If you don't want to be here, that means I don't give you enough value. That's what that means. If you don't want to be here, that means I don't provide you enough value. Maybe I'm feeling violent today. Maybe I feel like taking shots today. You got a customer retention problem? That's not on the customer. That's on you. Business lesson, my friend. Get you some. See, you thought you only learned trading here. You thought you only learned trading. No, my friends. I'll teach you how to do other things besides snipe the markets. Free of charge. So, anyway, let me see. What was our high today? 80? I could have sworn it went to like 83. YouTube is tripping. I guess it is 80. I don't know. I'll look afterward. But yeah, we definitely got more than 75, which is cool. So we got about 10 minutes until we get... we will have... can you guys see that? Yeah. We'll have S&P on the left, and then we'll have dollar on the right. Wait a minute. The symbol isn't... I don't want the symbol to be the same. Okay. So we'll do S&P on a 5-minute, and then we'll do the dollar. Actually, we'll do a 15-minute instead. So we'll keep it like this for just a minute. Right? So indices are lower and the dollar is lower. Okay. Strange day. Oh, back to 75. Welcome, everyone. Welcome, everyone. Oh, you did ask if I'm online every day. Sorry, I totally skipped over that and went on a tangent. I live stream here Monday, Tuesday, Wednesday, and Friday, 1 p.m. Eastern. I do a market review for the members every Tuesday and Thursday. Now, some of the member-only videos that are tutorials, like the models and stuff, that's not, there's no schedule with that. There's no schedule there. But yeah, I don't do anything on Thursdays other than the late market review. I don't live stream on Thursday. I have to have a day off, bro. You know what I mean? I tell you guys to take breaks. And why would I tell you to take a break if I didn't have a break in my own schedule? You know? Need a chance to sleep in every once in a while too, okay? But anyway. Yeah, Willow, and you don't have to make a list. No lists here. No lists other than maybe your confirmations. But you don't have to cold call people. None of that shit. Lucas, do I believe in God? Absolutely. Absolutely, I do. I know it doesn't seem like it because I cuss and talk a lot of shit, but I do. I absolutely do. And I agree, Willow. Jesus Christ is king, bro. You know, it's not a, you know, this isn't church. It's not a religious channel, but, you know, if you ask, I'll bring it up. I mean, I'll bring it up if you ask. Like, sure. Absolutely. Pop said it hit 83 as well. Okay. Yeah, I'm going to write that down. I figured it did. I figured it did. And we don't have to agree on everything. If you believe in something else, cool. If you don't believe in anything at all, do your thing. Big James says, hi, John. We love everything you do for us, bro. Don't listen to these ingrates. Yeah. I don't listen to that. I don't take a lot of people seriously, bro. I know, like, even like the MMXM trader, right? Who was, I mean, he has a large following because, you know, he tapped into the ICT cult, and that's fine. I would never build a reputation off another man, but, you know, whatever. The kids are going to do their own thing. You know, okay. But, you know, he was talking a lot of shit about my book for $36, right? Oh, you didn't credit ICT for years. And then, you know, he launches a PDF file for $250. Are you fucking kidding me? You know, why would I take him seriously? The dude's probably like 18, 19 years old anyway. The fuck I'm gonna argue with a teenager for? Let ICT do that arguing bullshit with kids. I don't want to do that. That's a waste of my time and energy, bro. I have done it, but I don't actively go seek that, dude. That's just stupid. You wonder why I get the entries I do, because I mind my own business, bro. That's why. I mind my business. Bro, read the Daily Stoic from yesterday. We got a couple minutes before this happens. Before the stream. I mean, the stream. Before Fed funds rate. January 30th. You guys have the Daily Stoic? January 30th. You don't have to stay on top of everything. Epictetus said, if you wish to improve, be content to appear clueless or stupid in extraneous matters. Don't wish to seem knowledgeable. And if some regard you as important, distrust yourself. End quote. And the page says, one of the most powerful things you can do as a human being in our hyper-connected 24/7 media world is to say, I don't know. Or more provocatively, I don't care. Most of society seems to have taken it as a commandment that one must know about every single current event, watch every episode of every critically acclaimed television series, follow the news religiously, and present themselves to others as an informed and worldly individual. But where's the evidence that this is actually necessary? Is the obligation enforced by the police? Or is it that you're just afraid of seeming silly at a dinner party? Yes, you owe it to yourself, or excuse me, yes, you owe it to your country and to your family to know generally about events that may directly affect them, but that's about all. Here's the kicker, okay? Here's the kicker. How much more time, energy, and pure brain power would you have available if you drastically cut your media consumption? How much more rested and present would you feel if you were no longer excited and outraged about every scandal, breaking story, and potential crisis, many of which never come to pass anyway? And that's the point. The more time you spend bullshitting around, the less time you can spend on your goals. We talked about that the last two streams. The less energy and time and efficiency that you're going to have to trade. You see everybody on Twitter, oh, the market sucks this week. Da-da-da-da-da-da. I called out a trade yesterday on S&P. Easy. I didn't give you the trade because the entry happened after we hopped off, but I said I would probably long here. What S&P do? It fucking rallied. It's not hard. It's because I mind my business and I hyper focus on what I believe to be important. And that's why I'm right way beyond more than I am wrong. Okay? It's not an ego thing. It's just, if you've been here, you know. We look for high probability setups and that's that. So yeah, I don't listen to those people. Nick, yeah, I'm not even going to comment. I'm not even going to comment on that. Do news candles always run in the direction of liquidity, or is it arbitrary? Well, damn, Lucas, arbitrarily, you're using big words this early in the morning, bro. First of all, I got to look at what the fuck that means, okay? Arbitrarily. What does that even mean? Secondly, I don't know. News, if there is identical equal highs, like on S&P, like equal highs here or equal lows, I believe it'll run for that. The fact that we're in the middle of both of them is hard for me to tell what it's going to do. But I guess if I had to say, it'd probably be lower. I guess if I had to say, I would probably want to see a lower indices today. But here's 1 o'clock. So we're getting a little bit of razzle dazzle. Dollar slightly higher in the first 20 seconds. We'll give it a few minutes and see what really takes place. I'm glad Optimus thinks it's hilarious. You know, it's like live stream stand-up. You know, trading in stand-up is what this is. Based on random choice or personal whim rather than any reason or system. Thank you, Alex. I appreciate that. That, you know, that's a good point. It's hard to say. I don't know. I think no matter what, the market is going to seek liquidity. And it's the reason why I said a few minutes ago when I went, oh, because as I'm looking at the S&P, I realized, okay, we have all of these lows, like higher lows consecutively here, and then we have equal lows down here. And that's why I'm thinking, okay, it will probably trade lower. Like consolidate here, leave the equal highs for another time, right? Leave that here, drop it, retracement into an imbalance during London or pre-market. That's odd to me. And then rip it lower and rip all the stops here. That's the only reason why I think it would trade lower. Am I trading it right now? No, I'm not pressing buttons right now. But I gave you I gave you what I think is going to happen. Oh, 85. Look at that shit. Look at that, chat. 85 all-time highs, baby. Shoot. I may have to do more giveaways if we get to 100. I don't know if we'll get there. I don't know if we're going to get there. Maybe if some other streamers hop off and then People come over here. Maybe it'll happen. Let's see. So S&P is slightly lower. Dow lower as well. Nasdaq slightly lower, but not making a lower low. That's interesting, but I'll still keep that 73 level down there. I still feel like that could be a viable target for today. What do you guys think? Do you guys agree, or do you have a different opinion? Do you agree, or do you have a different opinion? Some people clenching their cheeks. Yeah, I would agree. 2020, are you trying to long right now? Is that what you said? Is that what you said? I'm not trading this. Don't press buttons, okay? I just want to see. I'll watch on a 1 minute time frame. That is a large, relatively large imbalance there too. But I'll leave it up here. Yeah, I guess we can hang out for a little bit. If we have time, I guess I'll share the press conference. We'll probably fall asleep listening to Jerome. I'll share the link. I think this is the link. I usually don't watch it, but I'll drop the link in the chat so you guys can pull it up if you can. Matter of fact, let me know if one of you guys click on that and it pulls it up. Let me know so I know it works. Vadu says never disagree with John. Yeah, I mean if you trade counter to my bias, good luck. Good luck to you. So you'll get it right sometimes, and then other times you'll wish you'll be on demo. Yeah. My broker has a small gap at 48.44. Oh, okay. Well, Infinity, are you looking at SPX 500 or are you looking at ES? All right, thank you, Harmita, Sean, Prinslow, Devine, thank you for that. Again, I'm not trading this. I am just watching it. I'm just watching this on a 1 minute time frame. Okay. I just want to see what it does. Because that's one thing too. S&P has cleared that. Oh, that's not what I meant to do. The S&P cleared that. The Nasdaq didn't, but I still think it's probably a short. We'll watch it together for a minute. It says SP 500. Yeah, that's a CFD. So the broker feed is going to be different from the future side. They can make gaps. They can make wicks. They could do all kind of shit. They might even base it off the ETF. I mean, I don't know. I don't. They could do whatever they want with it because it's their feed. Like it's their price. They could base it off of something, but then they could move it as well. What, Cameron, I don't understand what you're saying. I don't think it does. Remember someone adding the Fed at the last meeting saying it would be nice if they could stream their own conference. I don't get it. I know Jerome Powell said close the fucking door, which I found to be absolutely bonkers. Which that was hilarious. I thought that was fake. Maybe it is fake. But if it's real, that was hilarious. It was like some climate protesters or something. He was like, close the door. When he dropped the F-bomb, it's funny. It was funny. They don't stream their own conference on their website? Oh, they don't? Well, I see they have alternate players on, like, and it has a YouTube link here too. That'd be kind of cool. I'm streaming on YouTube and then streaming another YouTube channel, which would be interesting. Yeah, so they're going to start in about 20 minutes. So why did they start streaming 38 minutes ago? You know what? I'm not going to question the Fed, bro. I'm not going to question the Fed. But yeah, I would assume it's going to be probably a volatile rest of this afternoon for the indices today. That's what I'm assuming. Just cycle one or two more times over here. That's kind of a strange Nasdaq. Hmm. All right, well, whatever. Whatever. They're playing like some intro bullshit right now. I mean, I don't know what that is. Forgot to click the go live button. Oh. Yeah, maybe. Maybe they got some goobers working at the Fed. Maybe I should go help them out. Maybe I should be like, hey, bro, do this or do that instead. You guys got any more questions? Because I'm telling you, it's going to be another 20 minutes before they go live. And I don't have anything for you. Right, look right now, I don't have anything else for you other than we're just watching this. Again, I'm not trading this. I'm not shorting this market. I'm just watching it. I think it is a short, but I'm not trading this. I'm just watching it. So we're still at 5.5%. So unchanged. Okay. What is it that actually happens to make the spreads widen at 4/5 p.m.? All I've ever heard is market changeover, but what actually is it? That's what it is. It's the close of business for that day and the open of like the next day. Think of like the trading view candle. Like when one candle closes, another candle opens. It's like that the day, right? The day closes, the next day opens. So spreads increase. That's just how it is, bro. It's always been that way. That's kind of a weird thing too, because when you first get into trading, and then if you have a stop loss somewhere, either in profit or not, around the close of business, you'll get stopped out, even though price never went to your stop loss. And you're like, well, damn, what happened? It's because spreads widen. But that's literally what it is, Cameron. This market changeover. Why is it not worth the risk for this short? I mean, I didn't say it wasn't worth the risk. I just am not trading it. Well, from 49.07 up to 49.18, that's about 11 points. So that's about $550 of risk. I just don't feel like putting $550 of risk on the table for a 1 minute imbalance during FOMC. I mean, I guess micros, maybe you could dumb that down to maybe $55 a contract. So you could probably take a couple of contracts to do that. But me personally, again, I'm not doing it. The indices are a little bit mixed, and they were yesterday too, and we did, pretty well on that. But I don't know. I'm just going with how I feel about it. I just don't feel it's the highest probable thing to do today. The Dow didn't even take liquidity on the upside, and the Nasdaq didn't take these lows. They all immediately traded lower, but there hasn't really been something that I like. And that's why I'm saying I'd rather just watch it. I still think it's going to trade lower. I'm just telling you not to press buttons unless you want to. But I'm not live trading this imbalance to short. I'm not live trading it. I'm not even options trading it either. I'm watching it. And yeah, Alex, don't do dumb shit between good trades. That's right. So we so it's been like 16 minutes. We got an initial drop the first couple minutes, and then it came into this imbalance, and now it's just been hanging around. So the 1:30 press conference, I think, is going to ramp things up. I think it's going to amplify. I think we're going to see more volatility soon. And that 1:30 is not until here. Right here. So we had 1 o'clock. This looks horrible. right? The 1 o'clock initial Fed funds rate, and then your press conference is here. So let's go back to one chart. So if you want something to study, this is what I would study today. We'll label this. Fed funds rate. FOMC press conference at 1:30. And this, so at 3, sorry, one more time. 3, basically the equities close. And so this from 12 to 3 is basically your PM session. So something like that. Like in a general sense, I would watch, like I would probably screenshot this if it was mine. If it was my chart. Sorry, 12 was there. Boom. Like this, I would screenshot and then just see what happens later. If you're not going to watch it minute for minute, just see what happens. But right now, it looks like it ran. It didn't even run by much. It looks like it ran that short-term high barely. Hold on, let me look at this real quick. $49.16 and a half. $49.18. So a point and a half. Okay. So it looks like it ran that, traded lower into an imbalance to potentially go lower. Right? Now, I'll give you a scenario. Imagine that I did trade this. Now that it traded back into it and then traded a little bit lower, if it was me at this imbalance, I'd probably be at break even. Okay, if it was me, because I wouldn't feel right if it came back up for these highs, like if it swept those highs. I would rather just take a break even than a potential loss on the idea. But I do have a habit of going break even too early. I do. Sometimes it's a good thing, and sometimes it bites me in the ass. But on a day like today, Fed funds rate and FOMC conference, high volatility, I want to reduce risk. I don't probably want to put the pedal to the metal on a day like today. Make sense? Oh man, I got to renew my mailbox at the UPS store. They keep spamming me with emails. I got to go do that. You guys ever have responsibilities? You guys ever have responsibilities? I hope so. The euro. Oh, what the fuck? I mean, well, the euro is just going to be almost an inversion of the dollar index. And I don't know what the dollar is going to do, so I definitely don't know what the euro is going to do. I do not know. I do not know. This just looks gross. This looks gross to me. Doesn't look good. I don't like it. I don't like it. But I guess we'll see. I guess we'll see, chat. I guess we'll see. Oh yeah, see. Let me see if we make a new low. If we yoink that low, I would definitely be break even had I taken this. See how it just tapped into that right there? How it just tapped into that? I'd easily be break even, maybe like 1 or 2 points. Probably like a point and a half maybe. Just to occur for or just to account for potential slippage in case it rips to the upside. But and again, the 70s is those lows. That would be like my lower target on the day. But a new low to me is almost always a partial. It's almost always a break even. That's just the way I like to do things. But then every once in a while you'll get some shit like this where it'll come up for the highs, still respects the imbalance, and then goes to the original target. So on days like that, yeah, it'll get me out at a break even on a day that I was right. But again, I say this all the time. It's not about being right. It's about making money. It's not about being right. It's about making money. Okay? Let me check the Nasdaq, see if we made a lower low yet. Not yet, but I mean like to see if we did, because we still don't have to. That could easily be a target as well. I won't fully explain it right now, but if that gets tagged, I will definitely tell you why. Or why I think it would do that. It has to deal with consolidation. That's part of it. Dropping lower, imbalance, and then this should rip lower. It doesn't have to, but I think that could be on the table. 5 minutes until the press conference. Damn, there's 16,000 people, almost 17,000 on YouTube looking to watch the press conference. I guess we'll join it. Lows on AU, Aussie. We can take a look. We can take a look. What is this line I have marked up? That must have been that. What time frame are you guys talking about? The daily? Or like a smaller time frame, like down here? Those? Oh yeah, look at that weakness. Look at that weakness. 1 hour. Imbalance here. Premium imbalance. Running for those lows. I could probably see that. You know what? That actually looks pretty good. Consolidation. Run higher. Retracement. Another run higher. It clears these. This is the only issue I have. And this is why I briefly looked at New Zealand. Because New Zealand took this high up here. Aussie didn't. But that still, to me, signifies weakness. Drops lower. And then, obviously, Fed funds rate for dollar. Yoinked it higher. Cleared short-term highs. 1 hour imbalance. And it's ripping. So I could definitely see that. Unless you guys are talking about these. Or the daily down here. I don't know. Aussie's got lows all over the place. There's lows everywhere. Asian session lows. So that's probably these, right? Down here. You might be right. You might be right. I could definitely see that on the table. Another 20 pips lower, probably. I like the idea. I like the idea. Let's see where the S&P is at. That's the only problem about a 1 minute time frame is you have to really zoom. You have to flatten out the chart in order to have the entire PM session on it. I mean, hell, I'm on a 27-inch monitor. And to have the labels and everything all in one place, you really have to zoom out pretty far. All right, let me pause this music. Okay, can you guys hear that? I think the Fed has better intro music than I do. That's crazy. According to YouTube, I think the high was 85. Did you guys see any higher than that? Did you guys get any higher than 85? Y'all think it's funny, huh? Okay, Pop. Yeah, okay, so it was 85 then. Cool. Well, wow. See, that's interesting. Because the all-time highs, I think, was 73 or 74. And then our target was 75, and we overshot that and went all the way to 85. That's interesting. That's interesting how that works. Because we talked about trading. Powell's pulling up.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made good progress toward our dual mandate objectives. Inflation has eased from its highs without a significant increase in unemployment. That's very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured.
Is it loud enough for you guys?
The path forward is uncertain. I want to assure the American people that we are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well into restrictive territory, and we've been seeing the effects on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%, bolstered by strong consumer demand as well as improving supply conditions. activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2% 12 months.
All right, real quick. I'm falling asleep listening to him speak. But so like this move right here, how I said I'd be break even, I would be out. Like I would be out here. This low would be a partial. This would get me out break even, and then I probably wouldn't do anything here. I'll still watch it with you guys, but I would be out by now, and I wouldn't risk anything here.
Broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We believe that our policy rate is likely at its peak for this tightening cycle. Policy restraint at some point this year. But the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting.
Continue.
We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
All right, what bullshit are they about to ask him?
Gina Smiley from the New York Times. Thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for better data. We're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on a path, sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6 month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
And I'm sorry, if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition, but we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing and that tells us that we are gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick Timmeros of the Wall Street Journal. Chair Powell, it seems to me you raised rates rapidly over the last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged here today current policy is well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those two risks?
So, as you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, you know, we feel like inflation is coming down, growth has been strong, the labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2% so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or its variance. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, look, I think, as you know, we consult a range of Taylor rules and non-Taylor.
All right. Well, real quick. So, what I have on my phone here, ES, and I have Dow Jones here because I flipped it earlier. I was watching. We were watching ES here, and I was watching Dow on my phone, and that's why I switched it because ES started trading higher, right? And so I was wondering if this was going to be a stop run or not. That's why I marked it. So we ended up trading right through that imbalance, and now you see why. As soon as we made that new low, I would be at break even. Right? Because now, had we held an open trade, like if a stop was up here, bam, that run higher was just stopped out. Now, one of you, I don't know if you're still here, one of you asked earlier why I didn't want to trade ES. Well, this is part of it is because remember I said how the highs are not the same, the lows aren't the same. And remember I was saying that initially at the Fed funds rate release, the Dow never cleared highs. It never cleared these highs. So, you know, if the Dow is going to trade higher, okay, cool, but I don't want to be short on ES, right? And then now all of a sudden the Dow just created equal lows. So, you know, that's my point, man. Could this have been an okay short for a few points? Maybe. But, you know, overall, I'm sticking to my guns. I said, look, I still think it's going to trade lower, but it went higher, right? That's part of the justification for that. If one of the indices, you know, has some liquidity that it might run for, Dow just did, then the Dow trading higher to get that is likely going to drag the S&P with it, and even the Nasdaq as well. Okay, and so the Nasdaq now has cleared whatever high that is from Wednesday. So Nasdaq tapped into that. The Dow has tapped at least into these highs. Okay, and so again, we're seeing the S&P follow suit with the other indices by trading higher. Okay, so should you trade FOMC? Should you trade the press conference? This is why I didn't. Okay, I probably would have either got a partial on a break even altogether, or if I took a trade and walked away like a goober, I would have taken a loss on that. Okay, so but anyway, I'll post the link to the press conference if you want to go watch it and listen to it. I mean, it is on YouTube, but I'll still drop it in here if you guys want to go take a look at that. But that's pretty much going to be it for today. So that's going to be a wrap. My data's frozen. What I want to see now that we have created equal lows, if we violently trade lower, this may be a target for today as well. But I highly doubt. I know yesterday I said I probably wasn't going to trade and then I traded. Today, it's going to be the same thing. I don't think I'm going to trade today. And that's pretty much that. So unless we get a violent run lower and then maybe like a revisit of something in a premium, I might short that. But I'm not anxious to press buttons here. Okay? So look, I got it wrong. Simple as that. But going into it, I said don't trade it. I said I'm not putting live money on this short. And now I'm thanking myself, right? That I didn't trade this. So there you go. Thank you, Sean. Thank you, Naruto and Nikki and Trillionaire. Are you watching the charts till the end of today? Yeah. I'm more interested now in the Dow than I am anything else, only because the Dow has the equal lows. That to me is really high probability. The micros have low resistant lows, but the E-mini has actual equal lows. So I'd be interested in watching that. But we've been here for almost 2 hours. I need to go probably eat lunch, like an actual lunch, and then probably work out and get some sunlight. I need to do that. So I'll probably watch it on my phone. I'm not going to sit here in front of the computer today. I might come back to this in the shit. We're about to approach the final hour. Yeah, I probably won't do anything today, but I would just be interested. So if you want to watch something, that's what I would watch. If we get a map, obviously I was wrong once. I could be wrong again. Okay, I could be wrong again. Yeah, UPS. I gotta go renew my mailbox. It expires, I think, on the 7th. It expires in a week. I gotta go renew it. But with that being said, thanks guys for being here. Thanks again for 7,000 subscribers. 85 all-time viewers for a solo stream. Thank you guys for being here. I appreciate you. We'll do our giveaway on Friday. I'll give away 3 copies of of Stillness is the Key. And I'll give away 1 10K challenge to the Liquid Trader. And if you guys are thinking about getting a 10K challenge already, the promotion is still available. The promotion is still available where you can use the coupon code New Year for 30% off a 10K or a 25K challenge. So that will not be around forever. That will expire, I think, in a couple weeks. So if you're going to do it, take advantage before it is too late. Y'all be good, man. I will see you on Friday.
I feel something new on the horizon of my heart. I see something new on the horizon of my mind. I feel something new on the horizon of my heart. It's breaking my mind. Can't seem to find a place to run and hide. I know in my life I've had tears down my side, so I'm asking myself why. I'm living a lie when all I can do is try. It brings nothing but pain when all I wanna do is go back in time.